Hey everyone, and welcome back. We're doing a deep dive today on Unshakeable Financial Freedom. We're using Tony Robbins' book Unshakeable, and it's full of strategies to not just survive market storms, but thrive in them.
Absolutely. The book really focuses on how to build wealth that lasts, and it's all based on real data and advice from some of the biggest names in investing.
Okay, so let's talk about fear for a second. That feeling when you think about investing, especially after what happened in 2008, a lot of people got burned back then.
Yeah, it was a rough time for sure. People saw their savings, everything they'd worked for just disappear. So it makes sense that, a Prudential study actually found that 44% of people in the U.S. just completely swore off stocks after that.
It's kind of like you see one fender bender and you're suddenly too scared to drive. But Robbins points out that avoiding the market because you're scared can be a bigger mistake in the long run.
He really emphasizes that. And that's where the freedom facts in Unshakeable are so helpful. These aren't just some motivational sayings. They're based on over 100 years of data about the market. Like, take the first fact, which is that market corrections are totally normal. It's like they've happened every single year since 1900.
Okay, but normal doesn't always mean easy, right?
Yeah.
How bad are we talking? Little dip or a full-on roller coaster plunge?
Well, between 1980 and 2015, get this, the S&P 500 had an average intra-year decline of 14.2%. Can you imagine seeing your portfolio shrink by that much?
Oh, yeah, that's a scary thought. That would make me want to pull all my money out for sure.
I hear ya, but here's the thing. Even with those drops, the market still ended up higher than it started in 27 of those 36 years. That's why they say time in the market beats timing the market. Trying to time the market is like trying to catch a falling knife. It's dangerous and messy.
So riding out those low points is just as important as enjoying the good times, which I guess leads right into your second fact, which is about those bear markets everyone dreads. I mean, they don't last forever, right?
Nope. The book says we've had 14 bear markets in the last 70 years, and usually they only last about a year. They're definitely not fun while they last, but they always end eventually.
Okay, that does make me feel a little better. It's just so easy to get caught up in the moment, especially with all the doom and gloom you hear on the news. Like, China's economy is slowing down, and we still got Brexit to deal with, not to mention everything going on in politics.
I hear you. It's easy to get lost in all the noise out there. But Robbins wants us to focus on the bigger picture, the long-term trends. Because even with those scary headlines, the market has basically followed the same path as the economy as a whole. Think about it. Increased worker productivity, all the advances in technology. It's not all doom and gloom.
It's a good reminder to not let a few bad days or even a bad year completely derail your long-term goals. And that actually brings us to freedom fact number 3, which is that the stock market has bounced back from every single crash and bear market in history. Like every single one.
That's right. And freedom fact number 4 really drives the point home. It says that over time, the stock market goes up. So yeah, we just need to keep our eyes on the prize.
Okay, but does that mean we should just buy stocks and hold on to them no matter what? What about when everyone's saying the market is overvalued? How do you know if it's a bubble about to burst?
That's the million-dollar question.
Yeah.
And Robbins gets it. He knows people are concerned, especially with how the market has been doing. But freedom fact number 5 reminds us that if you try to time the market perfectly, and you miss out on even a few of the best days, it can seriously hurt your returns.
Yeah, I remember that example from the book. They compared someone who stayed invested over 20 years, even though their timing was terrible, to someone trying to time the market perfectly. And guess who ended up with more money?
The buy and hold investor, every time.
Yeah.
Even with bad timing, it's better to stay in the market. And that goes right along with freedom fact number 6. The biggest losses happen when people panic and sell everything during a downturn.
It's that classic emotional roller coaster, isn't it? People buy when they're excited and then they sell out of fear and then they end up missing out on the long-term gains.
It's totally human nature, but it costs people a lot of money. And that takes us to the last freedom fact, number 7. The biggest risk you can take is not being in the market at all. The book mentions the study where they found that even the worst investor, like the absolute worst, still made money if they stayed in the market for 20 years. But the people who just kept their money in cash, they didn't do so well.
Wow, so it really is about courage over fear when it comes to investing.
Exactly. Those freedom facts are all backed by data, and they're incredibly powerful tools to help you make smart decisions, not emotional ones.
So we've faced our fear, and we've got the facts on our side. But the journey to unshakable financial freedom isn't over yet. Turns out there's a silent wealth killer lurking out there. fees.
Oh, yeah, and it often disguises itself as something totally harmless. But those little percentages can add up to a huge decafference over time. We'll dive into all that after the break.
All right, so we're back, and we're ready to expose this silent wealth killer, fees. Robbins really hits this point home in the book. He says it's like paying for a Ferrari and ending up with a muddy old tractor.
It's such a good analogy. Why pay a premium for something that underperforms, right? And the crazy part is that most people don't even realize they're getting ripped off. Did you know that 96% of mutual funds actually fail to do better than the market over a 15-year period?
96%? Are you serious? That's like playing the lottery with your retirement savings. So what's the deal with these fees? Why are they so hard to avoid?
Well, it's almost like this hidden maze out there. Let's break it down a bit. First, you've got your hedge funds, but those are like the VIP section of investing, only for the super rich. They charge these insane fees just for the chance to maybe beat the market. Then you've got your mutual funds, which are a little more accessible, but even those often come with high management fees and all these hidden costs, and that's because they're constantly buying and selling stocks, trying to outsmart everyone else.
And if that 96% statistic is anything to go by, it sounds like they're not doing a very good job. So where do index funds fit into all of this? They always seem kind of, I don't know, boring.
Exactly. Index funds are like the unsung heroes of investing. They just quietly do their thing. See, they don't try to be flashy or anything. They just track a specific market index, like, say, the S&P 500.
So they own all the same stocks that are in that index.
Yep. And that means less trading, which means lower costs. And the best part, you don't have to pay some hotshot manager a ton of money to pick stocks.
So it's kind of like putting your investing on autopilot. Less drama, lower costs. I like the sound of that.
Right. And let me tell you, if it's good enough for Warren Buffett and Ray Dalio, I mean, talk about investing legends.
Yeah.
It's definitely good enough for me. Both of them have said they like index funds, and their track records speak for themselves.
You know, it's funny you mention that. Robbins actually tells this crazy story in Unshakeable about how he found these outrageous fees hiding in his own company's 401k plan. And get this, it was being managed by a huge GE insurance company.
Oh, wow.
If it can happen to Tony Robbins, it can happen to anyone.
Yeah,
Right.
absolutely. That story is a good reminder that these hidden fees, they're like termites, just eating away at your savings without you even realizing it.
So how do we fight back? Is there some secret weapon, some silver bullet we can use?
You know, if we were dealing with vampires, maybe. But the best defense against fees is actually pretty simple. Get yourself a good fiduciary advisor.
Oh, what advisor?
A fiduciary advisor. They're legally obligated to put your best interests first, unlike some brokers who, let's just say, they might be more interested in pushing products that earn them a bigger commission.
Ah, okay. So finding a good fiduciary advisor is like finding a financial guardian angel. Someone to protect you from all the bad stuff.
I like that analogy. But Unshakeable warns us that not all heroes wear capes. And not all fiduciaries are created equal. You want to make sure you find one who's not only ethical, but also really knows their stuff and has a lot of experience. Robbins gives some great advice in the book on how to vet potential advisors. Check their credentials, see what their track record looks like, how transparent they are about their own fees, all that good stuff.
It's like dating in a way, right? You wouldn't just settle for the first person who swiped right. You want to find someone who shares your values, who gets your goals.
Exactly. You want someone you can trust.
And speaking of finding the right tools, Robbins talks about this great website, www.showmethefees.com.
Oh, yeah, I've heard of that one.
It's supposed to be this awesome resource for anyone who wants to take control of their 401k and see exactly what fees they're being charged.
It's like a financial x-ray for your 401k. You can analyze your entire plan for free. Knowledge is power, my friend, especially with your money.
I love that. So we've conquered fear, we've exposed those hidden fees, but believe it or not, our journey to unshakable financial freedom isn't over yet. We still have to deal with the most unpredictable factor of all, our own minds.
It's true. Even with the perfect plan, our own biases can trip us up. We'll get into all that after the break.
All right, investors, welcome back. So we've conquered our fear, we've smoked out those hidden fees, but now we've got to tackle the most unpredictable market of all, the one inside our own heads.
It's true. Tony Robbins says it perfectly in Unshakeable. He says even the smartest investors can get tripped up by these mental traps, these biases that can totally sabotage your success.
Yeah, like what?
Well, he talks about things like confirmation bias and overconfidence bias, and then there's recency bias. They're like these little gremlins in your mind that can mess with your decisions about money.
Okay, so let's shed some light on these gremlins. Let's start with confirmation bias. Isn't that just our tendency to look for information that confirms what we already believe, even if it means ignoring stuff that doesn't fit our narrative?
Exactly. It's like you're building an echo chamber in your mind, only listening to the voices that agree with you. And it's especially dangerous now with social media and all those algorithms, right? Like, think about the 2016 election.
Oh, don't even get me started.
But that's what I mean. People on both sides were only seeing what they wanted to see. And Unshakeable says that this happens all the time with investing, too.
Totally. I've been there myself. You get excited about a company, you convince yourself it's going to be the next big thing, and then all you do is read the positive news stories. It's like you're wearing blinders on purpose so you don't have to see the potential downsides.
It's a recipe for disaster. And it's not about ignoring the positive stuff. It's about actively looking for different viewpoints. You have to be willing to challenge your own assumptions.
How do you do that?
It's easier than you think. You just have to find people you trust, people who aren't afraid to play devil's advocate. It could be a financial advisor or a mentor or even just a friend who has a different perspective. Unshakeable gives some great advice on this.
Like what?
Well, like ask them tough questions. Where am I wrong? What am I not seeing here? Even Warren Buffett, the goat of investing, he does this. He has his partner Charlie Munger challenge him all the time.
Wow, I had no idea.
Yeah.
If Warren Buffett needs someone to keep him in check, then the rest of us definitely do.
Yeah.
So what about overconfidence bias? Isn't that everyone's favorite flaw?
It's definitely up there. The book asks you to think about whether you consider yourself an above-average driver, lover, more attractive than the average person. Most people say yes to at least one of those, right?
Guilty as charged.
Well, that's overconfidence bias. We overestimate our abilities, and with investing, that can lead to some really bad decisions. You take on too much risk, or you make these impulsive moves based on your gut instead of a solid plan.
Oh, I am so guilty of this too. You get caught up in the possibility of winning, and you forget that losing is always an option.
It happens to the best of us. But that's why Unshakeable stresses the importance of things like sticking with index funds. It's like a built-in humility check. They basically acknowledge that nobody can predict the market perfectly.
Plus, you just set it and forget it. No drama. All right, what about that last gremlin, the recency bias? That one always gets me.
Oh, you mean our annoying habit of thinking that whatever just happened is going to keep happening?
Yes, it's like our brains are stuck in the recent past.
Totally. It's that hindsight is 20/20 thing. The market goes up and we think it's going to go up forever. There's a downturn and it's like the world is ending.
How do you stop yourself from getting caught up in that?
Unshakeable says to create an investment success checklist, you come up with your own rules, and then you stick to them no matter what your emotions are telling you to do. The book talks about this guy, Paul Tudor Jones, this legendary investor. He had this whole checklist that he used to make sure he wasn't making any rash decisions, especially when the market was going crazy.
Okay, that's actually brilliant.
Right.
It's like you're outsmarting your own brain. So checklists, getting different perspectives, making a plan, and sticking to it. Sounds like a lot of this comes down to managing your emotions.
100%. And that's what I love about Unshakeable. It doesn't just focus on the money. It talks about this other really important aspect of wealth that we often overlook.
What's that?
Fulfillment. Because it's great to have financial freedom, but if you're miserable, what's the point?
That's so true. It's like that saying, money can't buy happiness.
Exactly. Robbins says that real wealth is about so much more than just money. It's about your emotional well-being, your psychological well-being, even your spiritual well-being.
So how do we cultivate that sense of fulfillment? How do we find that inner peace that no market crash can shake?
Well, Unshakeable talks about what Robbins calls the 3 triggers of suffering. These are the things that keep us from experiencing true happiness.
Okay, lay it on me. What are they?
The first trigger is loss, which makes sense, right? We feel pain when we lose someone or something we love. It's just part of life, but it can really knock us down. The second trigger is less.
Less. What does that even mean?
It's that feeling of scarcity, like you'll never have enough money, enough recognition, enough time. It's that voice in your head that's never satisfied, always wanting more, more, more.
Oh, I know that voice well.
And it makes it impossible to appreciate what you already have. And that brings us to the third trigger, which is never. It's that limiting belief that you'll never actually achieve your dreams, that you're always going to fall short somehow.
Those 3 triggers are like a recipe for unhappiness. How do you escape that?
Robbins says the antidote is gratitude.
Gratitude. Seriously.
I know, it sounds simple, maybe even kind of cheesy, but it's so powerful. Gratitude is like kryptonite to those triggers of suffering. When you focus on what you're grateful for, the good things in your life, the things you normally take for granted, it shifts your perspective. It takes you away from lack and negativity and opens you up to more joy, more contentment, even when things are tough.
It's like that saying, gratitude turns what you have into enough. So simple, but it really makes you think.
It's about retraining your brain, teaching yourself to look for the positive.
So to wrap things up, it sounds like Unshakeable isn't just about achieving financial freedom. It's about achieving a certain state of mind, right?
That's it, exactly. It's about figuring out what you value and then aligning your finances with those values. It's about finding your purpose, finding meaning in your life, and cultivating that unshakable inner peace, because that's what real wealth is all about. It's so much more than just the numbers in your bank account.
I love that. Well, that's all the time we have for today's deep dive. We hope you learned a lot about how to build an unshakable financial future. Until next time, happy investing.